I'm joined by Ronak Gopaldus. He is the country risk analyst at RMB. Ronak, thanks so much for joining us. Zambia, it's been in the headlines for quite a number of reasons. Just give us a sense of the economic plays and the dynamics. What's currently going on there?
Well, you just need to look at the financial markets this week to get a sense of what's going on. The kwacha took an absolute beating, losing 17% of its value in just a day. It's the world's worst performing currency. It's lost 80% of its value this year. So really some serious issues on the financial market front. But I think this is a broader problem, as the country is really experiencing somewhat of a perfect storm. On the external front, the fall in the copper price was a significant factor on account of fears about a China hard landing. There's emerging market risk aversion, which is also feeding into the currency. And domestically, the country's battling, fiscal pressures, as well as an election year next year, plus the power crisis. So a lot of negative headwinds for the country to contend with at the moment.
In terms of the fiscal pressures, I mean, copper being one of their biggest exports, I think about 70% or so. What is the outlook for Zambia in terms of keeping those fiscal balances in check?
Well, it's going to be very difficult, and the budget next week is going to give us a clear indication of what stance the government is actually going to take towards austerity, or will there be slippage. I think these sectors under tremendous strain. This week alone, last week we saw Glencore's results, which had an impact on copper prices, which are at their lowest levels in 6 years. In addition to that, with the power constraints, the mines can't produce. So you're getting a double whammy, really, on the mining sector from a price and a production perspective. Throw into the mix the regulatory uncertainty that's existed on account of the VAT non-payments, as well as the royalty regime. And really a lot of moving parts over here. Already we've seen...
Take us back in terms of those, the regulatory environment in the mining sector. I know you were in Zambia a couple of weeks ago, so you're also able to give us perspective of what it was like on the ground.
So, I mean, the big sticking point has been that there was a proposal to increase the royalty taxes for mines on open cast minings, and there was a lot of to and fro between government and the sector. Obviously, with the plunge in commodity prices now, it's been very difficult because the mines are already cash strapped. So ultimately, the government backtracked following the election of President Lungu in the by-election earlier this year. But a number of challenges for the sector in general. Already, we've seen job losses in 3 mines. And really what this comes down to is government revenues as well as jobs, which are, it's a very difficult balancing act for both the mining sector as well as the authorities.
The currency play, I mean, the Zambian kwacha has been in the headlines. Whether or not we're going to see some, forex exchange intervention coming through, it's been said we won't see anything like that. I don't know, what's your sense? I mean, what's the consensus or what may happen with this currency?
Well, the Ministry of Finance came out today and said that it's a free-floating currency. They're not going to intervene, given the fact that the level of import cover and foreign exchange reserves is very thin. Ultimately, all eyes are on the budget next week. The monetary policy alone can't do the heavy lifting. So really, there needs to be strong fiscal consolidation, and that's why we're watching what the ministry has to say next week. But generally, I think overall, the economy is under siege. Consumers are under pressure from the exchange rate, from the inflation front. Power is making it very difficult for businesses to operate in the country as well. And generally, the copper price is the single biggest determinant of the country's health. Now, you fast forward a year, there's another election next year, and you've got possibly further pressures around fiscal slippage, higher inflation, and currency. So the country is in a very tight spot at the moment.
I know that you're the head of a country risk analyst, country risk, and you're obviously looking or weighing the pros and cons for an investment argument for a country like Zambia. When clients come to you or people want to come to you and ask you, what do you make of Zambia? What do you say to them? What can you say in terms of the investment story here?
So I think the situation that we're seeing in Zambia is not unique. Commodity producers across the continent are really feeling the brunt. Angola, Nigeria, monoline economies are under serious pressure. And I think it really makes a very compelling case for diversification and industrialization. Because ultimately, with more diversified economic bases, you'd be much better insulated to this kind of boom-bust scenario. I think a lot of the fundamentals in Zambia over the medium to longer term are promising. Agriculture is still completely underdeveloped. Tourism is something that they can tap into. I think what we'd really like to see is the political will to take the right policy medicine at the moment in order to manage what is, by all accounts, a massive crisis for the African continent.
Ronak, thanks so much for coming in, giving us some perspective on Zambia. You said that the tourism sector and agriculture possibly areas that you can tap into. Thanks so much to Ronak Gopaldas. He's the head of country risk at RMB.